kick things off with a number that really tells you everything you need to know. 21%. Just let that sink in for a second. More than a fifth of all the oil and petroleum the world burns through every single day has to squeeze through this one tiny channel. It's a pretty staggering concentration of our energy supply in one place, and, well, it's also a massive vulnerability.
So that leads to the big, flashing, obvious question, right? What happens when a place this vital, this crucial, is threatened? Because believe me, the shock waves are felt absolutely everywhere. Let's unpack what that really means. First up, let's get our bearings. Before we can really dig into the risks, we gotta understand the lay of the land, the geography, the key players. What exactly makes this place a choke point? The name choke point is pretty on the nose. It's exactly what it sounds like, a strategic bottleneck in the world's supply chain. It's a place where one small localized problem, a single incident, can trigger a massive crisis for global trade. And the Strait of Hormuz, it's literally the textbook example. So, picture a map. The strait is this narrow waterway wedged between Iran on the north coast and Oman on the south. And get this, while the whole area seems kind of wide, the actual shipping lanes that these massive, gigantic supertankers have to use are incredibly narrow. We're talking just a few kilometers wide. There's just no room for error, and that physical reality is the source of all the tension. And all of this creates a really complex, delicate balance of power. Of course, you have Iran and Oman, the two countries that border the strait, but because this waterway is so critical to, well, everyone, you have a third player, international navies, usually led by the US, who are constantly patrolling to make sure ships can pass safely. It makes for a pretty tense security situation on any given day. Okay, so we've got the where. Now let's talk about the what. And really what this all comes down to is the money. The sheer value of what's flowing through this choke point every single day is just, it's mind-boggling. Remember that 21%? Well, here it is in raw numbers. 21 million barrels of oil. Let me just say that one more time. 21 million barrels every single day. That's about a quarter of all the oil that travels by sea on the entire planet. The scale is almost impossible to wrap your head around. So who's buying all this oil? Where is it all going? Well, the answer reveals a huge dependency. A staggering 82% of it is headed straight for Asia. We're talking about the energy that literally powers the massive economies of China, India, Japan, and South Korea. Their entire economic stability is tied directly to the safe passage of these ships. And if you thought this was just an oil story, think again. This is what makes the situation a real double whammy for energy markets. About a fifth of the world's liquefied natural gas, or LNG, mostly from Qatar, also has to take this exact same route. So this isn't just about fuel for cars. It's also about the gas that heats homes and powers electrical grids all over the world. Which brings us to right now. I mean, this choke point has always been a sensitive spot. It's nothing new. So why is it suddenly all over the headlines again? What's going on? The trigger, really, is a serious spike in the conflict in the region. Following some recent airstrikes, Iran has started making threats again, serious threats about disrupting shipping or even closing the strait entirely. And that, as you can imagine, has put global markets and governments on incredibly high alert. Everyone's just kind of holding their breath. And here's something that's absolutely key to understanding why prices jump around so much. The oil markets don't wait for something bad to actually happen. Traders price in the risk of it happening. It's often called a war premium, and it means that the mere threat of a shutdown is enough to send prices through the roof. But look, like I said, this is hardly the first time we've been here. This strait has been a flashpoint for decades. You had the so-called tanker war back in the 80s, where hundreds of ships were attacked. You've had other standoffs since. The tension we're seeing today is really just the latest chapter in a very long story. Okay, so let's game this out for a minute. What would a real, actual disruption look like for the global economy? I mean, what kind of shockwave are we really talking about here? Well, analysts pretty much look at two scenarios. The bad scenario is a partial disruption. Maybe ships get harassed or delayed. Even that could take 5 to 10 million barrels of oil off the market per day. And just for context, that's way bigger than the supply shock from the start of the war in Ukraine. A full closure, well, that would be catastrophic. And this is what it would mean for your wallet. A total extended shutdown of the strait could easily send oil prices flying past $150 a barrel. That's more than double the recent average price. Some of the worst-case models even see prices hitting $200. So I know what you're thinking, because it's the obvious question, right? If this one little route is so risky, why don't we just go around it? Can't we just bypass the whole thing? It's a great question, and the answer, unfortunately, is a hard no. It's just not possible. I mean, look at the numbers. There's some pipelines that bypass the strait, sure, but their total capacity is only about 6.5 million barrels a day. You just can't fit the 21 million barrels that flow through the strait into a pipeline system that small. There is no plan B.
And the consequences of that reality are huge. An oil price spike isn't just about paying more at the gas pump. It ripples through everything. It means higher inflation on all goods, which means you have less money to spend. That slows down the whole economy and dramatically increases the chances of a full-blown global recession.
So, given that the stakes are this unbelievably high, we get to the million-dollar question. What happens next? What are the experts watching for, and what's the most likely way this all plays out? Okay, so the general consensus among most analysts is that a complete long-term shutdown is actually pretty unlikely. And the reason is surprisingly simple. It would be an act of economic self-destruction for Iran. They also depend on that strait to get their own oil out to their trading partners in Asia. So what's seen as more likely are things like short-term blockades or harassment of ships. So if you want to follow this story as it develops, here are the key things to keep an eye on. First, just watch the shipping data. Are tankers still moving through? Second, what are the militaries doing? Are things escalating or calming down? And third, listen for any talk about major countries releasing oil from their strategic reserves. That's really the main tool governments have to try and soften the economic blow. And that all leaves us with one final big picture question to think about. We hear so much talk about the future, about the transition to green energy. But the hard reality is that today, our modern 21st century global economy is still profoundly, dangerously dependent on this single, volatile 20th century choke point. So the real question is, for how much longer?